Is Coupang a good investment? Let's find out in about 5 minutes. My name is Brian Feroldi.
And my name is Brian Stoffel.
And we're going to talk to you about the bull and the bear case for Coupang. Coupang recently came public, Brian, but what do?
So the best way, the elevator pitch, is to say that Coupang is the Amazon of South Korea. But the thing is that they take the convenience of Amazon and they bring it to a whole nother level. For instance, if you don't like a product, when I don't like a product, I have to go to UPS or go to my Kohl's or something like that to bring it back. You can just put it on your front door. You don't have to package it or anything. They'll come and pick it up. If you order something before midnight, you can wake up with that thing on your front doorstep. So they take the convenience of Amazon to a whole nother level. And part of that is because they're operating in a very densely populated country, which makes it easier for them to get to the front door.
Both of us, when we were researching this business, were like, this company is better at e-commerce than Amazon. And we would both love to be customers of this business. So what's the bull case for this company moving forward? Well, number one is they really have unmatched user convenience. As you said, you can just use your phone to order things. It gets to you in a matter of hours. You can order food that gets there. It gets there so quickly. And if you don't like something, you just put it on your doorstep and they take it back. That is incredible. Number two, we really like that this is a founder-led business with a strong mission statement. How did I ever survive without Coupang? If I was a Coupang customer and I got used to it, I could see myself saying that. Three, the moat here is actually pretty wide and getting wider. Not only do they benefit from network effects, not only do they benefit from low-cost production, but their brand name is really starting to resonate with consumers. Four, this company has a lot of optionality in it. They're basically following the playbook that was set up by Amazon 2 decades ago, except for they're doing it even better. They started out with e-commerce, they're getting into food, and they've set their eyes on the travel market next. And five, if they can continue to do what they're doing, this company has grown at an extremely rapid rate, and there's reasons to believe that they can continue doing so for a long period of time.
But it's worth looking at the bear case because there are some significant things that we have to consider. First of all, we've got to think about where are they going to grow, because they are just located in a geographically small country and they have already captured a huge part of the market there. Once they leave that country, they are going up against deep-pocketed rivals like Alibaba or Sea Limited. So that's the first question we have to ask ourselves. Second, they're not free cash flow positive yet. That's not unusual. This is the same playbook Amazon had, but at the same time, that does make the company somewhat weak if economic conditions were suddenly to go awry. And then we can't ignore the fact that there is geopolitical risk. They have a neighbor to the north that can at times be hostile and could definitely affect business.
Yeah. So how did this company score on our checklists? The answer is pretty good. On my checklist, it got a 68, which is just below my why bother category. However, this is still a new company to the public markets, and I could easily see the score improving dramatically over time, especially if they hit profitability. Yours?
For mine, it did much better. Got a 10.5. And honestly, once they become free cash flow positive, I could see that kind of going into the anti-fragile category. This is a very interesting and strong company when you run it through this framework. Mission-driven, solid financials. They need to be better free cash flow and lots of skin in the game.
Yeah. So where can we improve, and what are we going to be watching to move forward? Number one is the competition. This market is very competitive, and Coupang has been growing quickly and taking market share. Can they continue to do so, especially if they move outside their home market? Two, where is this company's future growth going to come from? They believe that their opportunity in South Korea alone is still huge, but eventually they'll run into a wall there and have to find new avenues for growth. Three, will this company reach profitability? As we saw from Amazon, there is a ton of operating leverage in this business, and once they turn on the free cash flow spigot, it can come fast. Four, they've identified the travel market as a next big growth market for them. If they can have success in there, that could propel their long-term growth and really prove out the optionality of this business, but they haven't exactly proven that to me just yet. If you're interested in Coupang, Brian and I did an hour-long deep dive into the business. You can watch that video by clicking the show notes. Brian, thanks for being here.
Thanks, Brian.